If you think about fundamentally, the rest of the world's already aligning for this. They know it's the end of the American empire. That's why China for 25 years has been developing Belt and Road. That's why they're developing these alternative currency arrangements. That's why China's buying all the gold. And that's why Russia's buying all the gold, and they're hiding it because they're going to, when the dollar starts to collapse, they're going to announce it to the world. They're going to announce, hey, we've got more gold than you. And by the way, we have all those cheap tech. And by the way, we have 72% of the world in this trade agreement, and our currency come to us. And the world's going to pivot away from the US, and they're going to go to, and again, this is the collapse scenario that we've all been talking about really since Nixon took us off the gold standard. We knew it was going to happen. Well, it's on our doorstep. The next 5 to 10 years are going to be that collapse scenario, and how do we react to it?
Historical data indicates that from 1976 to 2011, an investment in gold yielded a gold return of approximately 8.5% per year. This impressive performance has continued into the 21st century, with gold outpacing other markets and solidifying its status as one of the best-performing assets of our time. Investors and analysts closely monitor the People's Bank of China's gold-buying activities, which have been critical in driving gold prices to record highs throughout 2024. According to the latest report from the PBoC, China's gold reserves at the end of December 2024 were 73.29 million ounces, an increase of 330,000 ounces from November 2024. Founder and editor of Gold Silver Pros, RobertKientz, believes China and Russia have been preparing for the dollar's decline by stockpiling gold and building alternative trade systems. According to him, this shift will likely unfold over 10 years but could begin under Trump's watch. Since 2014, the US Treasury market has been losing its share as a primary global reserve asset. Global central banks have sold approximately $400 billion worth of treasuries while purchasing $600 billion worth of gold. A growing gap between the supply of US Treasury bonds and the demand from global central banks drives this trend. Based on current trends, Kientz expects a 20% decline in major stock indices by year-end, followed by a final market melt-up fueled by government money printing. Kientz sees this as the beginning of a larger financial collapse. Looking at market volatility data over the past 4 decades, gold prices have been about 1.3 points less volatile than prices of large-cap U.S. equities. But during periods of financial contagion and stress, gold historically has shined its brightest. In the 26 times since 1985 when monthly data shows U.S. equity volatility shocks, defined as realized volatility of more than 30%, gold's price volatility was 22 points lower than that of equities. Regarding the U.S. dollar, Kientz states its long-term decline since 1971 despite recent strength. He expects a deflationary collapse with the U.S. falling last but recovering more slowly than other economies. Now we present the clips of RobertKientz's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
That's why China's buying all the gold. And that's why Russia's buying all the gold, and they're hiding it because they're going to, when the dollar starts to collapse, they're going to announce it to the world. They're going to announce, hey, we've got more gold than you. And by the way, we have all those cheap tech. And by the way, we have 72% of the world in this trade agreement, and our currency come to us. And the world's going to pivot away from the US, and they're going to go to, and again, this is the collapse scenario that we've all been talking about really since Nixon took us off the gold standard. We knew it was going to happen. Well, it's on our doorstep. The next 5 to 10 years are going to be that collapse scenario, and how do we react to it? But I think it starts on Trump's watch. I think it starts now. And I think China, if they didn't just start the long-term collapse of the American stock market, they started, however, the rest of the world looking critically at our stock market and saying, we don't want to invest in Americans anymore. We need to start pulling our capital back. I think that's what they started at the very least. And that's going to lead to this deflationary collapse eventually. But I do expect at least a 20% pullback in most of the major indices, the Russell, the NASDAQ, heading into the end of this year and into next year. Because I do not see how we maintain these valuations in light of what China's just done, and in light of the fact that we cannot finance our government, and in light of the fact that everybody's saying we don't need the United States anymore. We don't need your debt. We don't need your dollar. And we sure as hell don't need your tech. If you look at a long-term dollar chart since 1971, it's down, not only against gold, but it's down in DXY terms if you look at dollar versus other currencies. So it has been on this long trending downslope, even though it's got some relative recent strength. And you're right, because China's had its problems a lot. Europe has certainly had its problems. I mean, you talk about South America having its economic problems. I mean, and even Russia had some economic problems there for a while, even though they're better positioned with less debt than the United States. They had their problems, right? And a lot of them were dependent on a long time for the dominance of the dollar and them exporting their resources. Now that they've got realignment of global trade, they're not dependent on that as much. So there's not as much of an underpinning of the dollar as there used to be. And we know from that 2023 World Gold Council survey where the central bank said that we're going to get the dollar under 50% of total world reserves, which would be the first time since it became the dominant currency of record. And that would mean that now we have a plurality of currencies to deal with. And that's where you're going to see that the DXY trend down, because the other currencies will go up. Now, you could see if we do have a worldwide deflation, which I wrote my book in 2009 with the premise that we would see worldwide deflationary collapse at some point. Yes, the other currencies could go completely bust. But if you look at their economy, their economic agreements, and you look at the fact that they have more gold and that they're producing and that they're depending on each other, they're going to recover faster. So the dollar will be the last to completely fall. It'll be the last to completely recover. And I think that's a different pattern than we've seen since 1971, even since 1940s, when we saw after the war and the start of American exceptionalism, what we term American exceptionalism. This is going to be an 80-year trend. Think about conjunctive waves. Think about the fourth turning. That research that Conjunctive did back at the beginning of the 1900s when he did for Russia and got him jailed. He said these go in 80-year periods. Okay, well, we're at the end of the 80-year period where it's the fall of the U.S. system and the rise of an alternative system, alternative currencies. And yes, those they all go down before they go up, but we will go up later than they will. We've got a bigger road to collapse because the advantages we've had have given us so much strength that we have farther to fall.
While discussing state-level monetary policies, RobertKientz underscores Florida's push to reintroduce gold as legal tender to stabilize finances amid inflation. He emphasizes that gold's rising value and its historical role as sound money make it a crucial foundation for rebuilding the economy post-collapse. 11 states around the country currently allow gold and silver as legal tender, including Louisiana, Texas, South Carolina, and West Virginia. Gold and silver bullion could soon be used as a legal way for Floridians to buy goods and services, the state's chief financial officer Jimmy Patronis said Wednesday. He announced his office is launching a study on how gold and silver can be used as legal tender in the state. Gold and silver can be bought as investments but can't be used to purchase goods and services. Gold and silver could be tax-exempt, meaning they wouldn't be considered personal property for state tax purposes. However, they could also help reduce the effects of financial abuses like debanking. Let's get back to the interview.
So in Florida, and what you're seeing, when you get to the end of a nation-state cycle, the nation goes back to what it knows before, and that includes money. So what you're seeing is this, we were all last year Citizens for Sound Money, which I'm on the board of directors at, had been advocating for several years for the return to gold. Not that we're getting rid of the dollar, but at the state level, we want people to be able to transact in gold. The states want it. Primarily, Florida wants it. Their monetary fintech office of the governor has told us they cannot complete building roads, bridges, and schools because by the time they get to year 3 of their capital project expenditures, the money they raised doesn't cover it because of inflation. So they want gold as a way to stabilize the state finances because they don't have a printing press like the U.S. does. So the U.S. printing press and the devaluation of the dollar is beginning to negatively affect, and has been for some time, state budgets. And so now you see at the state level, you've seen 6 states pass legislation, Louisiana being the latest, that makes gold explicitly money again in adherence with the U.S. Constitution. Because even though the Fed came out in 1913, the dollar came out, we never rescinded gold and silver as a form of tender. And the states have the right through Amendment 10 of the Bill of Rights, and so do the people, the states and the people can retain that because still in the Constitution and trade in gold and silver, so that we're asking states to pass positive affirmative language, upholding this and putting it on the books so that the states can begin building out the infrastructure for a gold-based economy. We've got this going on in Texas. We've got it going on in Missouri. We've got it going on in a lot of states, but the big one is Florida because it's the 9th largest economy in the world, just slightly behind Texas. And several other states have said if we pass gold as money in Florida, they will follow suit. And this will start getting gold back into the system. And that's critically important. Gold's rising. It had the 7th best year since 1971 last year. It was like a 25.5% gain. And it was like the 3rd best year since the financial crash of 2008, where you had 2009 and 2010. And then you had 2024 right in there along with those gains. So gold is going up. It's a store of value. It has been for 25 years. The gold has beaten the economic indices, the major indices, the S&P, the Dow. A lot of people don't know that. It has. And that's before you even get into yields if you want to lease it. So gold is a huge stabilizing factor. So in Florida, We're in the second year now of trying to get the Gold Money Act passed. C4SM wrote the one. We wrote it. I was one of the authors that wrote this legislation that is now being considered in the state of Florida. We now have competition. There's another grassroots effort with a couple of billionaires coming over the top of us, trying to kind of war with us a little bit in the language and getting that passed. But that's actually a positive, because now you have billionaires standing behind the passage, meaning they have money to push the Congress to pass this bill, because, like it or not, in the United States, money is the milk of politics. You got to have money to do this. So they're pushing money into the table to get this passed in Florida. And so it's increasing the visibility 100-fold of what we're able to do by ourselves. So grassroots money, all that coming into Florida. Florida's becoming a battleground state for getting gold as money again. And it's a huge state. It's an 800-pound gorilla, much like Texas. So we're also going to do this in Texas after Florida. So if we can get it passed in Florida this year, you can use gold as money again in the 9th largest economy in the world. That is gargantuan for what could happen in restoring the Constitution and restoring a stable money system in the United States to help us, because we're going to need this to build on the other side of this collapse. If we don't have gold in our system, you can't build it with dollars. I just talked about the weakness in the DXY. I talked about the weakness in our bonds. You're not going to do it with a fiat currency. Gold has to be there. Thank God that we have resources in gold that we can mine in the United States, and we have positive contracts with Canada and Mexico that mine a lot as well, so that we can rebuild our economy using gold as an option, okay? That the states and localities can do that, and even the federal level. We'd like to see this at the federal level. So we're there, and we're working on that, and we think very strongly this is going to get passed this year.
Consumer demand for gold in China has also been robust, contrasting sharply with Western investors' waning interest in gold. Gold prices are expected to reach $7,000 per ounce by 2030 and around $3,200 per ounce by 2050, influenced by potential market shortages. These predictions highlight the long-term volatility and implications for investors. Given China's continued gold accumulation and global de-dollarization trends, could we see a more rapid transition to a gold-backed financial system than anticipated? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.